Hello everyone, welcome to my channel. I am John and today I'm going to run you through my new investing strategy for the stock market going into the back end of 2025. So this approach is what I'm going to do to achieve two big goals really. My first big goal in life is to buy a house. I'm not against selling stocks to help fund buy my first house, and then beyond that it is for setting up a good future for my future family and hopefully early retirement. So yeah, I'm looking for financial stability, and if you're interested in long-term investing and building wealth over time, click that subscribe button before we get started. So what inspired my strategy? If I'm honest, it's come from a mix of short-term and long-term goals. Like I've just said, I am currently saving for my first house, so I'm not putting a lot in the stock market or as much as I could be. That's because I'm focusing on maximizing savings first, and I am not against selling some stocks to help fund the house if I need to when it comes to actually buying the house, but I've got a good year and a half horizon on that anyway. So I don't think I'll need to, but just in case I do and there's a house that I really want, or I need to sell it to fund or the fees or furniture, because I'd rather not get into debt after I've just cleared it, which you would see in my previous video. Yeah, that's the short-term goal. Long-term goal, I want to create financial freedom and then offer my future family stability and opportunities where possible. Yeah, I'd like to give back quite a lot. So the core philosophy around my investment strategy going forward is long-term investing with a strong focus on growth. So I'm mainly looking at individual stocks where growth can be achieved, whether it's high growth, moderate growth, just where any growth can be achieved really. And then I am setting aside a part of my portfolio that is only linked to ETFs. So I am in the S&P 500. I have a nuclear ETF, which I'm going to make a video on, because I think the way the world's going and the amount of energy things like data centers and AI is taken up, nuclear is the way forward, even for some private sector, depending on how big the company is. And then the idea is to balance risk with steady compounding. So over time, where I either take my profits or I'll just let it run. Over time, there's going to be strong growth, strong stability really, and I can reap the rewards of that. So how it works is I've got 5 simple steps that I'm going to follow when looking into stocks. So number 1 is stock selection. I am heavy on the fundamentals of a business, so for me that looks at the financial health, how they are growing and improving over time, how much debt do they have, what's the leadership team looking like, do they have a lot of experience, are they someone new, have they been with the company 30 years and now they're running the company. And then also a big thing is recurrent revenue streams. Obviously the more recurring revenue the better. Also, if I wouldn't use the product or service myself, should I be investing? As another take at it. Obviously there's some things I'm going to invest in that I'm not personally going to use, but currently there's Marks and Spencer's, which I'm invested in, and TKO Holdings. I'm both a consumer of their products or service. So yeah, it's like that sort of outlook really. Step number 2 is analyzing the key metrics. So I will also look at specific ratios like the PE ratio, the forward PE, return on invested capital is quite a big one that I like to focus on, return on capital employed, the profit margins, and then the debt to equity ratio. In case I do enter some trouble, can they cover the debt easily? So these numbers will tell me if a company is efficient, profitable and financially stable enough to continue growing after I've invested. Step number 3 is screening the market and industry trends. So to narrow things down, I research industries as a whole. This is usually a starting point for me, because then you want to know the overall health of the industry of what you're investing in. So I'll do the overall market research and drill into companies that I think like prop up my interest really. And then I'll also pay attention to sector trends. So for example, growth stocks tend to thrive in a bull market, whereas more defensive stocks and like consumer non-discretionary spend does better in bull markets. So it's depending on what cycle we're in, might alter what I'm investing in brand new or what I continue to invest in what I've already got. Step number 4 really is risk management. So in terms of risk management, a percentage of my portfolio, like I mentioned, goes to ETFs for broad diversification, whilst the rest will go to individual companies. So I will review these on a bi-weekly or monthly basis to make sure that the risk within the company is still the level that I'm comfortable at, see where risk has increased or maybe it's decreased and the company's doing a bit better. And then that feeds into the overall strategy of the final point, which is entry and exit, which I don't worry about a lot. I'm not a trader, but I'm happy to invest consistently into stocks and let time in the market work in my favor. I'll only consider exiting a stock if I see very limited room for growth going forward, or if I think it's hit a point where I'm like, right, this might have a downturn for a while. Can I see a better opportunity elsewhere? It might not mean I sell that stock, but it might mean I don't invest in it for a while, just push it to the side, let it sit there. Because obviously opportunity cost is a big thing. If I'm 40% up on a stock and I only see 2% more growth over the next 5 years, but then I find the stock that is got the potential to grow 300% in 5 years, obviously it makes sense to move my funds, sell that stock, move into the new one. In the long term, I just want to hold stocks, but there's going to be instances where I think, right, that's hit its limit for me, I'm happy with that, time to sell it, move on to something new. Why is my investing strategy different to others? To be clear, it's not radically different from traditional buy and hold investing. I believe in investing in quality businesses and holding them for a while. The difference is I've learned not to follow hype. So when I first started getting invested in the stock market, it was during COVID. So what's that, 2020? And I was finding out a lot of stuff on TikTok then, as you will do now. But back then, because no one had anything else to do, there was groups set up, and like I was influenced to follow penny stocks. Didn't lose money luckily, but I soon learned that that is a quick and slippery slope to lose money. So now my strategy is going for a balance of risk and reward. So I've got the back end stability of ETFs and the reward of growth stocks, hopefully, if my investments go well, because obviously it's not guaranteed. This strategy, really, I think it could suit anyone, but if you're a beginner, my advice is to start with ETFs, and that's because I think you should build the habit of consistently investing first, whether it's weekly, bi-weekly, monthly, when you get paid. Build that habit of investing, and whilst you're doing that over a few months, a year, 2 years, however long you want to learn for, just so whilst you're doing that, you can watch the market, see what's happening, understand behaviors, investing behaviors, because people's behaviors can cause stocks to fluctuate. Obviously news does as well. So learn the stock market, learn how to invest whilst building that habit of investing, and then go that way. So what is my long-term vision? As I've mentioned, long-term goal is growth, financial stability, and ultimately financial independence. For me, investment isn't about getting rich quick. Would be nice if I get a few quick wins to help me on the long journey, but obviously that's not guaranteed to happen, and that does not happen to a lot of people anyway. So it's about building a life where I can provide for my family, retire early, enjoy freedom, and basically just be able to say yes to everything I want to do. But yeah, so that's my investing strategy: long-term, growth focused, and fundamentals driven. If you found this helpful, please hit the like button, leave a comment what you think of my strategy, and I'd like to know a little bit more about your strategy. Subscribe for more investing content and following my journey. Thank you for watching, and I'll see you in the next one.